Hey, it's the Fintech Newscast. My name's John, and with me, as always, is Steve. Welcome to the podcast.
Good to see you in person, John. Not in person. Good to see you on video for the first time in a while.
Yeah. This is just an AI thing. You don't want to see the real face. Trust
No,
me.
no.
Yeah. And this week, we're lucky enough to have Aidan Corbett, the co-founder and CEO of Wayflyer. Welcome to the podcast.
Thanks for having me, John.
Yeah, sure. So we're going to start with some news items, things affecting the fintech world. And what Steve and I have been noticing lately is the amount of M&A activity, kind of interesting M&A activity, kind of driven by, in the US anyway, a little bit less regulatory oversight and a drive for companies to get set up for the new, maybe what will be the new world of stable coins and new tech. First, something that Steve knows a lot more about than I do, the Adyen acquisition of Talon.One for 750 million pounds. So Ferrari dealerships, get ready. It's it's the first major acquisition by Adyen, which has been doing really well. And Steve, what is the Talent.One appeal for Adyen?
Sure. So that's basically the appeal for this is that any merchant can essentially provide customized discounts and promotions and rewards to customers, and now they can marry that information about the customer, right? Which includes any transactions made online or actually in person, which is pretty interesting. So at the point of sale, and now you can combine it with the Adyen payment data, and you have a system where you can, now the company can offer any merchant the ability to provide customized, highly personalized rewards to customers both in person and online. So pretty interesting.
Very, very strategic. I guess if you're going to do your first big deal, it's got to be a very smart
It's
match
gonna be a
for
big
you.
one. Yeah, yeah. It's also
Yeah,
interesting
yeah.
because it kind of moves Adyen away from being, just, but essentially a payment processor to now sort of a commerce platform. They could, in some cases, either rival or be complementary. It depends on the use case to what folks like Stripe can offer now.
Got to beat that competition.
Yeah.
Yeah. And the other things that are kind of, I noticed in the deals, a lot of people kind of getting set up for the stablecoin world. There's a lot of regulation, there's a lot of compliance, there's getting set up in new countries, which we do have someone that knows something about that here. MasterCard buys startup BVNK to get a hold of their stablecoin established rails to get faster cross payments, as well as Kraken buying Reap for a lot of the same reason. Reap is Hong Kong based and already operates as a card issuer, has overcome a lot of the compliance and regulatory issues. So it's kind of companies getting a smart head start on the world of stable coins and new tech.
Yeah, it's interesting. It only took maybe 14 years, but it feels like stablecoins have finally grown up. They're now actually,
Yeah.
they're actually being deployed finally.
This is a recurring theme, Aiden, where we complain about how slow everything, how excited we were to read about all the new things that that blockchain would enable, but has it really come to fruition yet? And the answer we
I think
always
it's
get
coming.
is
Yeah, I
yeah,
think it's coming.
yeah.
Yeah,
And the answer we
yeah,
always get is just going to take more time. It's a big thing to take on.
yeah. I think it's there's certain corridors right now where I think stablecoins are really taking off, but it is very geography specific, and I think that's something that's kind of lost when you see big volume numbers being mentioned. Is
Mm.
that there are very specific corridors that do a lot of stablecoins and others that don't.
Can we get more specific? Where are you seeing more traction in terms of stablecoin usage?
So if South America and Africa tend to be the two places where you end up
Oh,
seeing a lot of
hmm.
stable coins. And then certain corridors, for example, we would have seen the US to China, where you would imagine there would be stable coins. There actually isn't as many.
Mm.
So it's, again, depending on where stable coins are trading at, it's often not extremely obvious as to like where the concentration is as to where stable coins are being used. But yeah, I think it's very exciting. And as more people adopt it, and especially when you see products like Rain, where you see it being backed on a card, that's going to accelerate usage massively. We see it because our customers spend a ton on international payments,
Mm,
because the vast majority of
mm,
our customers are e-commerce merchants. So
mm.
they are sending huge amounts of money every month internationally, and they're going to hopefully be a big beneficiary of stablecoins.
Interesting. I don't quite know how this stuff works beyond the U.S. borders, but are those stablecoins usually tied to the U.S. dollar or the euro or a local currency?
They're tied to the USD. Most payments that are made for inventory are made in USD, even if you're sending money internationally. So,
Oh,
um, for example, if you're buying inventory in China, often most of those payments are still made in USD. Some are made in local currency, but some of them are often made in USD too. So, it tends to be USD stable coins.
fascinating.
Yeah, some great insight. So, we can see why MasterCard and Kraken are making these purchases to get into these new markets, new areas. Just one other M&A activity, Banco Santander. Seems weird to say it in English. Banco
Banco
Santander.
Santander.
Banco Santander.
Very
How's
good.
that?
Banco Santander, yeah.
Yeah, Banco Santander buys Webster Bank for $12.2 billion. So they're looking to expand in the U.S., especially in the Northeast where Webster is, and get a hold of those sweet low cost funding deposits, which is going to be more of a concern as we see inflation and interest rates go up. So a smart move for them. But
You
yeah,
know,
lots of we're expected to see a lot more M&A activity in the fintech world in 2026 for a couple of reasons. The expansion, the helpful regulatory environment these days. But go ahead, Steve.
yeah. I was just curious whether you think we'll see more M&A activity specifically within banking because of the somewhat high interest rates and the cost of money. Is that because you basically want to bulk up your reserves and have access to a bigger pot? Or I guess the question is, how are high interest rates affecting M&A in banking from your perspective, John?
Well, we're going to see. I'm not going to predict the future. I'm going to bow out of that one. We will see these kind of strategic buys and just make it a lot easier. And a lot of fintechs are growing up where they have this value of having overcome the regulatory, having expanded into different geographies, and then companies putting all the pieces together to get that scale. Jumping into Wayflyer, who's definitely affected by interest rates and lending in the lending world. What's your feel on what's going on these days? In the U.S., we just had this pretty negative announcement about inflation flying up to
Mhm.
3.8%. Yeah, I'm sure you keep an eye
I
on these
keep an eye on
things.
inflation. Absolutely.
Yeah, just a little bit of effect. So, what do you think of that and the world that's affecting a Wayflyer these days?
So we started in 2020, and we kind of joke internally that
What
every
a
single
great
year.
time. What a nice
I know,
stable time to start.
exactly. Ironically, it was, but we didn't know it at the time. So we launched a working capital product for e-commerce merchants in April 2020. So the second month of COVID, which
The
felt
exact
risky at the time, and it
lockdown.
turned out to be the most amazing time to provide funding for e-commerce, because every e-commerce merchant was beating their targets and running out of inventory. So you had a lot of startup success is based on luck, and we definitely had some luck with our timing, and that really kind of set us on a path where we were able to scale very, very quickly. But
Well, when
since
you're
then, it
smart
feels
and
like,
capable, Aiden, you tend to get lucky a lot.
yeah, but you need a bit of luck too. And
Yeah.
every year since then, we joke there's been some kind of a black swan. And it's the one thing about e-commerce is it's affected by every single macro event. So if an oil tanker blocks the Suez Canal, it's going to be affected. If Meta's algorithm changes, they're going to be affected. If the price of oil goes up, they're going to be affected. So even if you're a small business turning over $100,000 a year, you're still a global business, even if you're operating out of your bedroom, because you're going to be affected by all these global factors.
I'm sure a lot of garage companies are glad to hear you say that.
Yeah,
We're a global visit. They're putting on their website right now.
exactly.
Uh, But congratulations, by the way. You guys just received another bit of funding, a great validation of your business model. Is it enough to keep up with the growth? I know you're expanding in the U.S. and growing
Mhm.
everywhere else, or is it a constant search for more capital?
It's a constant search for more capital, but that's not a bad problem. And in lending, the more capital you raise, provided you keep performing well, the more capital you can get access to. And it's a business where the economies of scale are real. So if all three of us quit our jobs in the morning and decided to compete with Wayflyer, we'd be out of business in about 3 months because we might be able to raise a small amount of debt, but it'd be at a much higher price than what Wayflyer raises the money at. So we would only be able to take the customers that Wayflyer either doesn't want because we wouldn't be able to compete on price or on size. So there are real economies of scale in lending, and there are also real advantages in distribution because the more prominent you are in the market, the better partnerships that you get. So that's one thing we were very conscious of when we launched was we knew we had to get big quickly, but also get big carefully. And that's always the line you're walking as a lender. Can you scale your book so that the big bulge bracket banks are willing to back you, but at the same time you need to have a pristine loan tape? And that's the line that every lender walks.
This is a bit of a change from the companies that you started before. I was going to say it helps that you have a track record and people are willing to invest in you.
Yeah,
But
the previous
it's
companies were a
very,
lot smaller.
yeah, a lot smaller,
Yeah.
and you're very much in the crux of borrowing and lending and making that spread, which is it's very different from pure technology. Well, I guess the definition of
Yeah.
fintech. Was that a difficult transition at the beginning? How much did you have to learn? How much was the learning curve?
I had never made a loan in my life before Wayflyer. So,
Not even to
so
friends.
not even to friends. So I never even taken a loan barely. So we had, we were running an analytics business called Conjura, and it was an e-commerce analytics business. And my co-founder in Wayflyer, who was not in Conjura, came in to meet us, and he was working in an e-commerce accelerator. And he said, your technology is really good, but you should be using it as an underwriting engine rather than analytics product because e-commerce companies need working capital much more than they need analytics. And he was right. So we kind of tested this very quickly among our customer base, and we realized the demand for capital was much greater than the demand for analytics, as good as we thought that the analytics was. So we set up a new company. I left Conjure with a handful of folks, did a big IP license agreement, and that was the start of it. So it was really a spin out of the previous company. And as I said, in the previous companies, I might have waited 3 or 4 years to get to $1 million in revenue, and we kind of got to $1 million in run rate in about 2 or 3 months
The
because
demand was there.
demand was there. And I think that's something that I always say to founders when I'm talking to them, that if something works, it tends to work very quickly. And sometimes something can come along like a new AI model, and that suddenly kickstarts your functionality. But normally it's because you've done something different. And if you've been grinding away at something for a long time, it's probably not going to work. If something works, it tends to work very quickly.
Yeah, you're so lucky. It's good to have the good people around you. Usually, all my friends give me really bad business ideas. Uh, and but you're saying since they failed quickly, at least that's a blessing.
No.
Indeed. Yeah.
I'm curious, Aiden, because you launched this, I believe in Ireland, and how is the SMV cash flow financing space different in Ireland, or I guess in the EU
Well, we,
zone
we
versus the
actually
US?
launched in the UK in month 1 and in the
Okay.
US in month 2. So one of
Oh,
the
okay. So
advantages,
yeah.
Steve, one of the advantages of being in
Oh,
a small
that
country
quick.
is you got to go international fast.
Yeah.
So we had all our regulatory work done for the US and the UK well before we launched. And we always knew that we wanted to be in the US as quickly as possible. And
Mm.
because it was during COVID, we didn't have anybody on the ground here, maybe one person for the first 2 or 3 years, but it was 60% of our business. So
Oh,
we wanted to go international quickly. And I think Ireland today might be 1% of our book. The US might be 60, the UK
Oh,
might be
wow.
25, and then Australia and Germany are the guts of the remainder. So we've always been a de facto US business, just we haven't had a lot of boots on the ground here.
So
until
you
maybe
did
2 or 3 years in.
hit international success right away. It was like U2 and then Wayflyer.
Yes, we were faster to the US than you two were, but yes,
Yes.
definitely.
Yes. I'm glad you pointed that out. Yeah,
Yeah,
yeah.
yeah.
But
So you
yeah,
oh,
go ahead,
sorry.
Steve.
So you mentioned earlier the fact that if you operate this kind of business, it's really important to have a lot of scale, and as you
Mhm.
know, the UX is a fairly saturated or fairly well developed market for these kind of solutions. How do you differentiate what you can offer versus what Block or any other players in this space can do? What's sort of the key thing that makes businesses go, I'm going to go with Wayflyer. That's the way to do it.
It's all underwriting. So there is no market for a premium lender, really. So
Yeah.
your dollar is as good as my dollar. So there isn't like a premium price you're going to pay based on brand.
Hmm.
You do rely on reputation a lot. So
Mhm.
you do rely on how you treat customers, particularly when things get more difficult. You rely on things like Trustpilot scores are incredibly important because when you take a large sum of money off like a company, you want to trust who's at the other end of the contract, particularly when it's an unsecured. Oftentimes, it's an unsecured loan, but it's really around underwriting. If you're in lending, you need to have either a distribution advantage and or ideally an underwriting advantage. So, are you using data that other people are not using, or if you're using the same data, are you doing it in the same way? So, our original edge that we had was we were using data that people weren't using before. So when you came to Wayflyer, you would connect up your Shopify store, you would connect up your Facebook ads platform, you would connect up Google Ads, Google Analytics, all this operating data that helped us understand what your future looks like, as well as looking backwards into your bank account and your financial statements. And we would look at things like, is it existing customers or new customers that are coming back? How much do you rely on discounts? Have returns spiked recently? If returns spike or if chargebacks spike, it normally means that you might be selling when you don't actually have the inventory in place. Are you reliant on multiple SKUs or a single SKU? Have returns and ad spend gone up or down based on your recent meta performance? So we would get all these signals that no like lender in the market would look at, and that helped us underwrite companies that were getting no offers. It's not that we were beating anybody, but they were getting no offers. There was one or two competitors in the market when we launched. So Shopify have a product that's still there today, and there was a company called Clearco based in Canada. But other than that, it was a great market to enter. Unfortunately, at the time, we had maybe 9 or 10 entrants joined when we did as well. And there was a kind of a period where we were all kind of fighting tooth and nail to see who would win out. And there was quite a few markets that went through that period in 21 and 22. But ultimately, you have to differentiate on underwriting. And you need to balance pricing, your risk, and the volume. And you need to nail all three. Because if you decide to sacrifice one of them, you won't have a great book. And finding that balance determines who wins and who loses.
So this actually sounds like a a data scientist wet dream to be able to look at all these data points, right, and find what is
And
causation
you
versus
see Aiden
correlation
smiling.
in this.
Yeah,
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 exactly. Yeah,
absolutely. We would have customers calling us up asking for help with insights as to how to run their business because most of the information we were pulling was from the APIs, and the APIs surface a lot more data than the Shopify user interface. So
yeah.
we would point out at these 5 products are down quarter on quarter. You don't have any currently you're operating at a marginal loss on each one and or a contribution loss. But how do you know that? So we then started surfacing our underwriting dashboards to the customer so they could actually get the insights because we were getting so many questions from customers about their own business.
That's
I wonder.
interesting.
This
We've
seems like
never,
yeah.
Steve, have you heard of anybody showing their work when they're doing the underwriting?
No, not at all. It's always this
Yeah,
little black box, right? It's just sort
black
of
box.
yes or
Yeah.
no. Yeah. But it also seems like the kind of the kind of data and the kind of insights that would actually be useful from a business strategy and planning perspective. So other than having customers come to you and ask you, "Hey, how do you know this?" Is this something that you could deploy as a service, sort of some business strategy forecasting tool using all your data?
Yes. So our big challenge as a company right now is to people share a lot of their data with us as part of underwriting, but we can actually help them with a lot of other challenges as well once that data is connected. So we're very keen to launch non-lending products in the future. And in truth, we probably should have got there earlier. So we've really been focused on lending and nailing that for the last 6 years. Now is our opportunity to launch other non-lending products that typically leverage the same data that we collect. And this could be something like insurance, because obviously insurance companies would want to know a lot of the same information that we have today. For example, what countries do you source your inventory from? That's a very relevant data point that we have that an insurer may not actually have if they're providing trade insurance. So there's lots of other products that we want to launch. In truth, we've probably been a bit slow to do that. But this year, although I'm not able to disclose our products yet, this year we'll certainly be launching quite a few non-lending products.
And is the idea to launch those using your team now, or will you partner with somebody who can offer the services?
In some cases, we'll have we may work with a partner, but it'll all be embedded within the Wayflyer application.
Yeah, so we don't have to ask about next steps. You have a clear path to growing, which is a great example of what we see a lot in fintechs and a lot of startups. Once you start doing something, so many other opportunities appear, right? When you're ready for it, it comes about. And we can certainly see just from that how people would be clamoring to provide capital to you. But it doesn't always feel like that sometimes. Or how are the conversations?
So we haven't had problems from a debt perspective at all. So we've had great partners, particularly with JP Morgan and Atlas, who backed us from the beginning. The challenge that happens is something that are outside of your control. So, for example, the recent worries about private credit, that suddenly will change, for example, the diligence processes that lenders have. So when you're exposed to the capital markets, things outside of your control, even businesses that are not related to your business at all, they can affect the process that you now go through because credit committees might rightly change some of their policies. So you have to be cognizant of it. But ultimately, what I find with debt investors is that they're much more predictable in a good way than equity investors because they just want to see the data. They want to see your customer concentration, the performance of your loans, consistency of pricing. And if they like that, then you're normally in good shape. Whereas with equity, it's harder because you've got to sell a story. You're dealing with someone with a lot more implicit biases. They might have lost money in this space before. So debt tends to be, when we're raising debt, and we do that a lot more often, it tends to be a lot more predictable in terms of whether you'll get a term sheet and what the pricing will be. Whereas equity, I think, is actually much more challenging to raise.
You mentioned jumping into the U.S. from the very beginning. Were you pretty prepared for this in terms of the culture and the business environment differences? Or
It's
are did the movies and TV shows do you right, and you knew what to
yeah,
expect? Did
I
you
would
watch Wolf of
say
Wall Street and say this is how it's done in the U.S.?
so.
And or were there some surprises? Any good stories about surprises
There
like
were a
that?
few surprises. They were all positive, though. And what I mean by that is the US is not only the biggest single market in the world for which companies to enter, it's also the easiest and the best. And what I always say to founders in Europe is US companies and founders, they're better customers. And what I mean by that is in Ireland, for example, if you want to win a 30K deal, you're going to have to visit somebody 3 or 4 times in person and take them out for lunch.
Wow.
We did not need to do that in the US. Like customers have bigger budgets, they make decisions faster. If they're impressed by our product, they'll press go. They're willing to take a bet on smaller businesses. So the thing that delighted us the most was actually it was easier than selling into the markets we were more used to for a lot of those reasons. And we did know this, and obviously as a lender, US founders are much more comfortable, and the US in general is much more comfortable with credit than European markets are. So selling into the German
A
market
little
is
too
very
comfortable.
different to selling into the US market. So most of the surprises were positive, whereby we were probably taken aback by how quickly we were able to sign deals, especially without having boots on the ground. And that's why we ended up focusing most of our sales team, who were based in Europe, focusing them on the US. So we were all working shifts. For the company didn't really wake up until midday and didn't turn off until midnight
You had the tiger by the
during that
tail
period.
all of a sudden,
Exactly.
huh?
And the West
Huh.
Coast is very ecom focused. So Southern California, there's a huge West Coast. There's a huge e-commerce scene. So it wasn't the 5-hour time difference we had to grapple with. It was the 8-hour.
Yeah.
Ah.
It seems like you've doubled down on your US presence, and I think you opened an office in Charlotte recently.
Yep, we picked Charlotte.
Why did you end up picking Charlotte as the spot to open
Instead
the
of San
beachhead?
Francisco, by
Instead
the
of San
way.
Francisco,
Yeah, I know it's
Good question.
massively expensive here, but yes.
Yes.
Other than
So
that.
we wanted
Yeah.
we had a matrix. So we wanted direct flights from Dublin, where we were headquartered. We wanted to avoid the New England winter. We wanted a 5-hour time difference than an 8-hour time difference. We wanted a city that wasn't as expensive as New York. And we also wanted a city that had a lot of fintech and a lot of banking talent. And when you put all of those together, you pretty much end up with Charlotte, maybe Atlanta, maybe one or two more. But then we actually visited Charlotte and we just loved it. Like, it is a city on the up. Like, even when we arrived, the first thing we were saying is this city has it is a real confidence about it. Everybody we met there was telling us how many people are moving to Charlotte every week. I think it's the third fastest growing city in America, and it is. It's a great city. And I hadn't been there before. I knew Michael Jordan had the NBA team, but that was about it. We were. That was kind of the matrix we had, and it kind of fell out as the top pick. And then when we visited it, we were good to go.
So you're helping driving the prices up there.
Yeah, not yet, but maybe.
So, famously, Charlotte has become, the site of banks like Wells Fargo and B of A, et cetera. How does being in that ecosystem, in that physical ecosystem, affect your strategy as a business?
Well, one of the main roles that we want to hire for in the US is underwriters. So it's massively helpful from that perspective. It's also, I think, it's a destination city. So people will move to Charlotte to work for you, even if they weren't planning on moving to Charlotte before. And that's one of the big challenges that we didn't realize at the beginning when we launched in the US. Whereas in Europe, we know that everybody wants to live in London and Paris and a few of the big cities, but we didn't realize how big a destination city that Charlotte was. And actually,
London,
North Carolina
Paris,
in general is
Charlotte.
very hot right now.
Yeah.
Yeah. Exactly.
You hear that all the time.
Nothing
all
in between.
The time.
But North Carolina in general has taken a lot of people have moved from New York into North Carolina. So we were that was one of the big pluses as well. So we had a few people from we had a small New York office. Most of that office, I think, moved to Charlotte as part of this once we opened it.
Cool. Yeah, you can buy a large house and still be comfortable, not a massive commute. Yeah.
Great weather.
You can definitely say it.
It's got it all.
That is one thing I will agree with you on is on the U.S. side is that kind of flexibility where old giants, we let them die off and new places and new companies can take their place. It seems much more frequently, easily in the U.S. than some other places.
Yeah, absolutely.
You don't have protected state champions that are around forever, even when they're past their prime and not as efficient.
Yeah, and you also tend to have cities in Europe that are that get all of the focus. So if you think of SF,
I think that's common
LA,
everywhere outside of the U.S.
Yeah, it is actually. Germany is slightly different, which is more distributed. But if you think of Paris or London, that's New York, SF, LA, all rolled into one city. Whereas I think that it's very healthy that you've got that kind of state by state competition.
So I'm curious. You mentioned that you're launching a few products. Sometime this year. You're looking at possibly insurance could be a good space. Where will Wayflyer be in the next 3 years?
So our challenge is twofold. The first challenge relates to lending, and we are gradually moving beyond just funding consumer brands. So we started with e-commerce. We moved into brands as well that are stocked in Walmart and Target and other chains. And we're now moving out beyond that into other verticals. So there are a handful of other verticals that we think we can underwrite with our processes in a very similar way to to e-commerce. So our first target is to move into other verticals, and that will allow us to continue to grow our loan book aggressively. And then the second challenge is to move into non-lending products. The challenge with lending is that it's a great product for monetization. It's not a great product for engagement, because we tend to have maybe a bi-monthly relationship with our customers. If it's any more than that, that's probably not a good thing. But what you end up doing with lending is it's a great product for monetization, but you don't have that daily or weekly active user base that you would have off a SaaS product, for example. So there are ways in which we need to not only improve and create new revenue lines, but also just increase the core engagement and strengthen that customer relationship. So they're the two things I'm working. If I'm not working on moving into new verticals or launching new products, I have to look at what I'm doing.
Which countries are you really chomping at the bit to jump into?
With moving into new verticals, I've kind of shut off new countries. We're in the
So
markets we want
nothing
to be in right
on
now.
the dock. Canada's
With
just right here, right next to us.
Pardon?
Yeah, no plans for Canada right next door?
We have a small presence in Canada, actually. We do a little bit in Canada, but it's much smaller than the other four markets I mentioned. And with fintech, as you probably know, it's entering a new market is not trivial. So it's much harder than if it's not a fintech, because you have to look after local regulation. Even here, we have to go state by state. So we will have a different product in Texas than we would in North Carolina, for example. So
right, you just make it look easy.
Yeah, there's a lot of complexity going on under the hood, and you're constantly monitoring all the local state laws and everything.
Yeah. So, on that note, I give you a magic wand, and you're able to wave away any piece of regulation in the U.S. or in any state. They can make your business. They can essentially improve your business. What is that piece of regulation or red tape that you just magically wave away?
It would be very helpful to have a common usury limit across all the states, because they vary dramatically today, state by state. So if you were going to put a usury limit in place, which I would, by the way,
Sure.
if that was common, that would make things dramatically easier. And you would avoid some of the kind of state by state, and then where do you want to be located as related to the usury limits and things like that. That creates a lot of complexity. But to be honest with you, longer term, and this doesn't even relate to Wayflyer, the government's decision to start granting OCC licenses again, which you've probably seen over the last couple of weeks and months, I think that's great, because that's what's really going to bring more competition on the deposit side, as well as what's been there on the lending side. So there's been
Meaning the
really good
national
competition on the
charter
lending side.
for
Yeah, sorry,
operating
yeah,
across all the states. Yes.
exactly. That will really begin to bring better competition into the market as well, and more innovation. And it's creating a more level playing field to competing against the big banks.
Makes sense. Yeah.
So, we started the conversation on M&A. You have so many plans, and you're so, passionate about them. What kind of conditions, or if any, would you have to sell now if somebody offered what? Or what kind of partnership or that kind of thing?
I think it's more personal than commercial when I say I wouldn't want to sell. So I think we've scaled, we've gone through a ton of different challenges, fought off a lot of competitors. At this stage now, I feel like I'm kind of playing offense a lot more, and it's a lot more fun. So I just wouldn't want to stop doing it. So from a personal perspective, I wouldn't want to consider a sale right now, because I think the company has a lot more runway to go and a lot of potential ahead of it. And I'm enjoying it a lot more. So I think from that perspective, I really wouldn't consider it right now.
So Jamie Dimon calls you on the phone after seeing this podcast, and you turn him away flat.
Yeah, I mean, the number would have to be ridiculous. Yeah,
or you can still run it within a larger thing.
I don't think that's what actually happens.
Yeah. As soon as it came out of my mouth, I heard what I was saying there. Yes.
Yeah, I'm not sure that's what happens.
Well, I'd be afraid to see what would happen if we applied the Fintech Newscast to your underwriting. But otherwise, we're we're very happy for you. We're bringing innovation to the U.S. We always welcome that. So thank you so much. And thanks for joining us on the podcast.
Thanks for having me, Janice. You really enjoyed it.
Yeah, keep up the good work. That's Aidan Corbett, the CEO and co-founder of Wayflyer. Please hit subscribe to keep up with the latest in fintech news. And thank you for listening and watching.